I think it's been kind of blown out of proportions, this whole news, because there was a report that got leaked that said, Amazon might be, breaking down the tariff charges on their products. And then the White House came out, obviously, and then said that, that wasn't okay. And then Amazon released a formal statement that said that they were never contemplating breaking down tariffs on their main website, but they were going to do it potentially on their Amazon Haul e-commerce website, which is Amazon Haul. Essentially, it's a copycat of Temu and Shein and that business. But that's a very small business of Amazon, and it was never actually implemented yet. But the good news, I think, is that I don't think it was ever really contemplated for their main website.
So now that we've jumped that hurdle, as an investor, why do I care about that? Should I put that in the rearview mirror? And what should I pay attention to when they report on Thursday? Is it goods coming from China? Is it the cloud? Which is it?
Yeah, I think today's news, we can put that in the rearview mirror. I think now the focus is on the quarter. And for the quarter, I think there'll be investors who would probably be less focused on the quarter itself, the Q1 period, and probably more focused on the Q2 outlook, given how much has changed in the macro environment. We think there's potential that the Q2 outlook could be maybe wider than expected, maybe a little bit softer than expected. Many retailers have been guiding a little bit more conservatively right now, which is no surprise given tariffs and the impact of tariffs. But yeah, I think all focus is going to be on that e-commerce business, and specifically if there's going to be a tariff impact on margins. And then of course AWS, which is Amazon's one of Amazon's most profitable businesses. That business has been performing pretty well over the last few quarters, and we'll likely get to hear if whether there's still momentum in AWS or whether potentially that business is slowing down given the macro environment.
Can you give me the dollar figures and the percentages for quarter over quarter or year over year growth? But again, the dollar figures that investors should pay attention to for revenue.
Yeah. So the consensus revenue figure is 155.1 billion. So they're expecting about 8.2% revenue growth for the quarter. We're expecting about 8.3%, so just a little bit above consensus. And then the other important metric to focus on is operating income. And so the consensus figure for operating income is 17.4 billion operating income. We're expecting about 18.1 billion in operating income. So a little bit above consensus there. But that'll be another thing to focus on too, because Amazon has been growing operating income at a pretty attractive rate over the past few years. And we do expect that to continue despite tariff risks.
And are those figures healthy, given the fact that there might be some forward pull by consumers trying to get ahead of the tariffs and alleged potential supply shortages?
Yeah. So I certainly think that you'll probably see a pull forward in sales, especially those bigger ticket discretionary categories. Seems that consumers do want to get ahead of that, especially given the potential tariffs on some of these products. So we'll likely see a pull forward in sales in March, which is the end of their Q1. We'll probably see that even in April, which is part of their Q2. So there's a potential that Q2 could be a better than expected period because of that. But really, I mean, for the past few years, really, the investors have been pretty excited to see the bottom line growth at Amazon, not just operating income growth, but operating margin expansion. It's been growing pretty sizably over the last few years. And part of the reason is because their e-commerce business is becoming more profitable, lower supply chain costs, lower delivery speeds, or sorry, faster delivery speeds, but lower delivery time to get to the customer. So that's, I think, a trend that's we'll likely continue to see that this year, but at the same time as we have tariffs. And so I think the $1 million question is, what's going to be a bigger impact? Is it going to be tariffs, or are they going to still make strides on lowering their cost to serve, things like robotics, automation, things like that? So we'll likely have to wait and see that. But we're expecting.
Let me interrupt you. Let me follow up. Let's talk tariffs. What's the key question that you or the other analysts will ask in the earnings call about guidance for the next quarter, given the fact that we're hearing about essentially all shipments from China have stopped coming into the United States?
Yeah, I mean, essentially there's an embargo on Chinese goods right now. And the question is going to be, what's going to be the impact on margins? So, Amazon, it's a little bit different than other e-commerce companies because Amazon has their own first-party e-commerce business, and they also have a very large third-party e-commerce business with third-party sellers. And many of those third-party sellers are Chinese sellers. And that part of their business, we could see a larger impact there, especially given, especially if there's more Chinese sellers that are impacted by these tariffs. But at the same time as that third-party business, Amazon collects a fee from these third-party sales. So they won't feel, I guess, they won't feel direct impacts from tariffs, but indirectly they can feel impacts from the fees from the goods that they sell. But then again, the big question is what's the impact of tariffs on margins, and will Amazon eat some of the costs, or will that be predominantly the burden of the sellers? And so that's what we'll likely wait and hear.
And what about AWS? What percentage or what kind of growth, percentage growth do you expect to see in the quarter and in a dollar figure, if you can quantify that for us?
Yeah, so we're expecting about 16.5% AWS growth, which equates to a little bit over $29 billion of AWS revenue. So that is a sizable deceleration from Q4. In Q4, AWS grew about 19%. We're expecting a little bit slower growth in AWS this year, mainly given that this business is becoming really large, has become really large really fast. It's over a $100 billion run rate business on an annualized basis. So naturally, I think the growth figures might start slowing down a little bit. But I think the big focus on AWS is really on the margin side of things. AWS margins last year were exceptionally strong. But this year, Amazon is ramping up capital investments in AWS, more data centers, more chips, things like that. And so there's a potential to see weaker margins in AWS, but that will likely be a near-term or short-term phenomenon, because over the longer term, usually these investments do pay off pretty well, and you'll start to see stronger margins in AWS. But at least in the near term, we could see some margin weakness in AWS.
Give investors the one thing that you see as perhaps most optimistic or hopeful in the long term for Amazon, and if it has a time horizon, can you give that as well?
Yeah, I mean, some of the most optimistic things at Amazon is really some of the things that we're not even really modeling right now for the company. Right now, Amazon has three growth pillars. It's e-commerce business, it's AWS, and it's their advertising business. Those are the three of the growth pillars of Amazon. But they're also investing in all sorts of other areas. Right now, there's a initiative called Project Kuiper, where they're launching satellites into the sky in order to bring broadband internet to underserved parts of the world. That can potentially help their e-commerce business. That can also help the AWS business. But right now, that's not the revenue of that business is not really in our outlook. Also, Amazon Pharmacy, we're not really forecasting much growth there, but that could be a potential upside. Grocery is an area where Amazon has tried to invest in over the last decade, but really has yet to make a splash in grocery. So these are all, I think, upside to our estimates for Amazon.
Has Amazon actually delivered a satellite to orbit on their own spacecraft through Hyper?
Yeah, so they just started to launch commercial satellites into the sky. They're still very early stages of that, but yeah, they're in the process of launching satellites into the sky. I think that'll probably ramp up through the rest of this year, and they can potentially start to monetize that potentially later this year or certainly into next year. So we'll have to wait and see what the opportunity is there. But again, it's not just us, but I'm pretty sure most of the sell side is not really forecasting the revenue opportunities from Project Kuiper. Amazon has a really large advertising business right now. That's growing exceptionally well. There could be a slowdown in the ads business as well, because a lot of the advertisers at Amazon are third-party sellers. So if a lot of Chinese third-party sellers are feeling the impact of tariffs, maybe they don't want to advertise. So there's some, I think, risk there. But at the same time, as Amazon's also just getting into video advertising, with Amazon Prime. Last year was the first year they actually introduced ads to Amazon Prime videos, and this year they're ramping up Prime Video ads too. So I think there's always some pros and cons in all these businesses right now. So again, we'll have to wait and see what the report and outlook looks like when they report on Thursday. Like I said, the company has transformed and morphed in many different ways. Even back when Amazon invested in AWS, 20 years ago, people were like, "What were you doing?" But obviously now, that turned out to be a great investment, and they're a huge cloud computing business. So we'll have to see where Amazon ends up. Right now, it's all about AI, and I think over the next decade, we'll likely see Amazon ramp up in AI. It's still a very small portion of Amazon's business right now, the AI revenue, but that's likely going to grow exponentially over the next few years.